Marcel Williams here with Elliott Wave Source, #1 source for Elliott Wave technical analysis. Today is December 16th, 2013, and today we'll be doing a brief recap on a couple of pairs that we touched on last week and just give a slight preview as to what's to come this week. And we're going to start out with the copper futures. Now, copper futures, the count on this has been on the money. Now we had a head and shoulder formation, which we had saw on the 15-minute charts right here, which is indicated right here with the left shoulder, right shoulder, the neckline. Then we saw the break above that and prices took off. So it showed us that that was our wave 2, which ended at about that 76.4% Fibonacci retracement, and have been pushing higher since. It broke above that descending trend line and it's still pushing higher. So now our next level of resistance is at that descending trend line, though prices could push a tad bit higher before it starts to correct. And the reason being is that that would be 161.8% extension of wave 1. So prices push towards that 1.618 fib, which is puts us at about 3.38, and that descending trend line is at 3.35 rather. So it's a little bit lower. So we could see prices bounce off that descending trend line, which is what I'm anticipating, and then we will see prices push higher to give us that larger wave 5. So we should see the wave 4 correction on a bounce, and then prices higher. But overall, we do like this future to push significantly higher. So once it breaks above, then we should see prices take off from that point. Now shifting gears over to the dollar CAD, another pair that we touched on in this week, and we were projecting a move downwards. So we've been saying that from the beginning of the week that prices should fall off as we have entered in that corrective phase, and that is what we saw. So we saw prices push lower, then it came back up, it shot back up, but then it continued its movement downwards. So we're anticipating a move towards that 61.8% fib as wave 2 retraced 38.2%. So the law of alternating waves, so we should see prices push to that level and then take off. And I'm just going to jump down on the 15-minute charts, get a closer look. Now, as stated before, we had that wave 1, which was followed by a 38.2% correction for wave 2. And then that wave 3, same distance as wave 1, then wave 4 saw that A wave, then the B, and then now we're anticipating that prices will push it at 61.8% fib, which puts us at 1.0528. Now that wave B, it retraced 76.4%, and then it has shot down lower. So a 100% move would put us at 1.051, which is what I believe would line us up with the 61.8% correction. .051, so just in that vicinity. So we should see prices hit there and then shoot off from that point. So longs will be in order on a bounce of that 61.8% fib. Now shifting gears over to the Aussie dollar. Now the Aussie dollar moved a bit strange this week. So we were anticipating a move higher, and that's what we should have correlated with our dollar CAD, but everything was a little bit out of whack this week. So we saw prices break below that rising trend line. So it broke below the support level and then shot through significantly. So now we have to readjust. So now we're just 100 pips off the beginning point of our wave 1. So prices push below that point, then our count would then be invalid, and then we would have to revise the count at that point. But as for now, count still stands, as we are looking for this wave to bounce higher. So we're looking for a price action to push higher. but I would stay away from this pair right now, as it is divergent from the pack, so could see prices push lower and then thus forcing us to revise our count. But with that one, we were way off base. Now shifting over to the Kiwi dollar, showed a little different picture this week. Now with the Kiwi, we had this as our A, and then we have this as a rather complicated B wave, which is what we're working on. Working on the tail end of that B wave and jumping down on the 15-minute charts to get a closer look. And we had a head and shoulder formation brewing at the end of subwave B. So now we see the head and shoulder formation, we see the neckline, and then prices opened at this point. At this point we were looking at longs. Longs were filled, but then as we saw, prices moved rather choppy from that point on. Broke below what we had as support at the time, and also broke below that neckline, which had previously broken. But our bias is still to the upside, and the reason is if we move the rising trend line down a tad to the wicks, we see that prices is still holding that rising trend line. So now support resides at that 0.822 level, so you can definitely look for longs at that mark, and still looking for prices to push higher. And as we take a closer look, we see that this could indeed be our subwave 1 within that larger wave 3 of this count. So this could be our subwave 1, and then that subwave 1 was followed by a 76.4% correction. So for wave 3, we should then see that 1.618% move, so prices should shoot to that 84 region, closer to 85. And then our wave 1 of that count, this wave 1 of this cycle, we should see a 261.8% correction at that point to keep up with the subwaves. But for the subwaves, anticipating that prices will push to that level if it holds above this rising trend line. Now with what the Aussie is doing, it will be interesting to see how this pair reacts in this upcoming week. Now another pair I want to take a look at is the Singapore dollar. And with the Singapore dollar, also had a head and shoulder formation with this pair, and this one is holding at this moment. Now that's pretty strange in that both trades are conflicted. The dollar, Singapore dollar, and the Kiwi dollar, both are at opposite ends. So it'd be interesting to see which one actually plays out. But the dollar, Singapore dollar, we saw that it broke the neckline, it came back and retested the neckline, and it is holding this ascending trend line. So we can definitely look for this pair to still shoot off and push higher. So with this week to come, it'll just be interesting to see which one of these pairs, the Kiwi or the Singapore dollar, which one will play out. And lastly, just want to take a look at gold futures. And gold futures would kind of give us a direction as to where price will go. Now with gold, we saw we had that wave 1 and wave 2. Wave 2 shot slightly past that 76.4% mark and is finding trend line support. So as stated, we are expecting that this wave 2 should shoot off into our wave 3. So we're looking for prices to push significantly higher. And then what that says is that we're expecting risk to increase. So with that said, we're looking at that Kiwi to push higher, we're looking at the Aussie to push higher, and that dollar, Singapore dollar move might not play out. And with the dollar CAD, we're also expecting that to push lower, as well as we're expecting the market to take on a lot more risk. Well, that's what gold is pointing to. And now as we just jump down on the 15-minute charts, so in the beginning of the week, we anticipated that that wave 4 should have ended here. But with that, all we saw that we just got that wave 1, that larger wave 1, which was followed by 76.4% correction for wave 2. And then we should see that wave 3. Now targets for wave 3 set at 1280 and then about 1310. So looking for gold to push significantly higher and then push those risky assets higher as well. Well, that's the review and the brief outlook for the next week. Any questions or comments, definitely feel free to jump into the chat room. Thanks for watching today's video, and for you guys that are trading this week, enjoy your week trading and good luck.